going on, everybody? It is Monday, December 15th. Today was a very, very good day to trade. Unfortunately, I didn't trade, but I still want to break down the day for you guys from the daily, the hourly, 15 minutes, and then execution time frame. This is my edge, is how I use it. Not my edge, I got it from AM Trades, but this is how I was able to become profitable using this strategy right here. On the daily, as you can see here, there is a big, big range. This is 2 week range. Here we look for the narrative. Obviously, here we got a narrative because we traded outside of the range, right? In here, there's no narrative because the daily time frame is staying within the range, so it's staying inside this box. But on Thursday, on FOMC day, we got a manipulation on the range high. Don't mind that. And on Friday, we traded back inside. So basically aiming for the range low. But we never got there. We got there on NASDAQ, but not on ES. And NASDAQ, once it got there, once it took the low, it did not give a reversal. So that means that from expansion, if we consolidate, we continue, right? We continue lower. So that's how I came knowing on Monday today. I showed you I'll show you right here. This is how I look for confirmation or invalidation of the trade. So framing Friday's candle to get the midpoint because I don't want to see Monday go too far into the high of the range. So basically all the way to the high of the premium. Favorably, we want price to stay below the equilibrium if you seek to continue lower. In this case, right? In this case, I was looking for Monday to take the low of Friday and ultimately take the low of the range, which is here, right? So if we go down on Monday's time frame, on Monday's candle, the development of the daily candle, this is what we got, right? So we got open, high, low, right? So if you can see here, when the market opened, it didn't trade to any place significant, right? It just opened, created a fairly swing right here. Well, this is a S&T with NASDAQ, but it's irrelevant because there's another low right here, right? It's the previous day low. This is Friday's low. Monday didn't trade into it. Instead, he just made further swings, right? And then he traded high and high until it got to this relevant swing. So this is a relevant swing from Friday's price action. When we got to it, as you can see right here, when we broke above it, instead of continuing higher, instead we consolidated for 4 hours. See, it's 1 hour, 2 hours, 3 hours, 4 hours. We consolidated, right? So we consolidate, we are creating a range. And when we create range, we seek to see a manipulation either above the range or below the range. Below the range, if we want to see the market go higher. Above the range, if we want to see it go lower. And this is what happened here today. We saw a manipulation of the high of the range, and then on the open is what we got, right? We got a big drop. Now I'm gonna go down to the 15 minutes to show you exactly what I'm talking about. Right here, It's the range consolidation. We broke above the relevant swing, right? But we didn't do anything. We didn't expand higher. So basically trading away from it. All we did was we consolidated until we got 930, and 930 created a change in state and delivery right here on the 50-minute. Obviously, if you see a candle like this above a high, you don't want to trade it higher, right? You don't want to try that. So instead, we look for the opposing liquidity, which was the previous day low, right? So all we're doing is basically looking for manipulation, changing the state of delivery, and then looking for a continuation or looking for the entry model when the direction is already confirmed, right? So we did that in the 15-minute, in the 1 hour, and on the daily right here. See the daily, we traded above the high, we displaced down. Here we're looking for confirmation for the move down, basically framing the continuation. How we frame the continuation, we look for manipulation again on the 1 hour, which is right here. And then we look for manipulation on the 15-minute, which is above this range right here. Since the direction is already confirmed by the CSD, we look for continuation entry, right? For me, it's auto blocks, especially auto blocks that look like this, right? It's a big candle, like a bulky candle with a lot of range. Not like very, very long wicks, but a big body. Perfectly into a fair value gap. That's, it's good to see from time to time. And I need to see a closure below it. So basically, I need to see a strong closure through the opposing candle. That's how I confirm the order block, and that's how I confirm the steel strength, the steel volatility. Because if it stays and it gives you like 4 candles for it to finally close below this, then that means it's just creating another range, which price will seek to liquidate till they continue lower. So you want to see this, a close below, and basically trading into the opposing candle. For me, I always trade to 1 to 2. The rest, just let it go. But since today I didn't take a trade, that means I didn't take this trade. I didn't take this trade today, but this is how I would have done it if I would have taken it. Alrighty? And that's basically it. Remember, liquidity, CSD, continuation entry. That's all you need, literally.